because I've been in Bitcoin since 2013, and it's my life's mission to get Bitcoin in the hands of billions of people around the world, and I won't stop until we do.
It's very clear that the rest of the market has kind of been washed.
Wall Street will not stop at spot. They're going to want derivatives. They're going to want structured products. They're going to want Bitcoin yield.
Welcome back to the Rollup, your home for technical talks and open conversations that shape the modular future. Nothing on today's show is to be construed as financial advice. You can see our full disclosures list at therollup.co/ventures. Sit back, relax, and enjoy today's episode after a quick word from some of our awesome partners.
Innovating finance, global, institutional, and on-chain. Deep liquidity to drive capital efficiency. Now maximize yields on institutional-grade liquid staking with ETH. Unlock $1 trillion of capital via Bitcoin. All of this secured by Mantle's treasury of billions in stables and ETH capital pools. This entire ecosystem is coordinated by a vast network of seasoned VCs that are aiming to create the next generation of banking and financial technology. This is Mantle.
All right, we're in Hong Kong. Rich, good to have you back on the podcast. Not your first time.
Yeah, excited to chat live.
Yeah, man, it's our first time meeting, which is great. How's your experience here been so far? How's it?
It's been super good. Hong Kong is my favorite city in the world. So I love to come here, eat like my body weight in delicious Cantonese food, Indian food, etc., that I can't get other places. So
yeah, I came here first time November last year, and I was blown away. I did like all the hiking, was like 75 degrees, sunny every day, and I was just like, this city's amazing.
I've always told people it's like New York, but in Asia. So it's like skeuomorphic with New York in a weird way, and like I don't know, I feel right at home here.
What's different to me has been the cultural differences in the way that the event is ran and in the way that the people are here. You walk into rooms and I don't really know most of the people, whereas ETH Denver next week.
Yeah.
You're going to walk into the room and, you're going to know half the crowd, right? And so that is one thing that I've been grateful for. The other thing is just experiencing how the Eastern world thinks about crypto and blockchain. And it's a whole different mindset compared to how things are in the West.
Couldn't agree more. I think like Hong Kong's one of the most international cities in the world, probably like other than London, maybe Paris. And it's so amazing that you get kind of the East meets West kind of viewpoints here that are really interesting and novel, and it's not just kind of echo chamber.
Yeah, I agree. So I think the big focus here is institutions. And I think so I was on a podcast where we were actually interviewed, and I was asked what the trend for the summer is. There's DeFi summer 2020. Last year was like Solana summer or something, if you will. This year is like, I said, it's just going to be institutions. It's going to be which projects can get institution backing outside of BTC and Solana, by the way. Like, who is going to be the ones that lead that way? Because I think we'll see a lot of like dispersion in the asset performance based on those who are able to be kind of front facing and appealing to institutions. So yeah, what's your take on that? Like, give us the update on the Bitcoin institutional side, the demand side, and kind of what you're seeing from Gore's perspective as well.
So I totally agree with that viewpoint, first and foremost. And I think like meme coins hyper accelerated that, right? Where like it actually took that low float, high FTV meta and then accelerated even further, where like now there's no market for most tokens. And it's really now a flight to quality. And one of the best ways to demonstrate quality, staying power, et cetera, is to really be able to have a beachhead with institutions. And this has been a big focus for Core really for the last like year and a half. And I think we've shown with our new LST product, where we're partnered with Maple, BitGo, Hex Trust, Copper, like some really, tier one institutions, and now some, TradFi banking partners as well that we'll be, chatting about here more soon. But that's a big focus for us because we're actually trying to deliver real value. And I think that's the other, big piece of this cycle is getting it to product market fit. And for a long time, product market fit in crypto just meant retail use cases. Right? It was like, okay, can you build a better DeFi protocol? And I think what we've realized, as a space collectively is that there's these very large, largely untapped pools of capital that can be put to better use. And crypto rails are a 10x better improvement on how to go do that. And at least for us in the Bitcoin space, the spot ETFs were really the best things that ever could happen to us because you went from people not having access to both access and legitimacy in a very different way. And many of the conversations that we have are, okay, what comes next for Wall Street? And as I've been telling people now for the last couple of years is Wall Street will not stop at spot. They're going to want derivatives. They're going to want structured products. They're going to want Bitcoin yield. And this is the play that we're making, because we think we can power kind of this next wave of Bitcoin adoption, because it will not happen on Bitcoin L1. It's too slow, it's too expensive, it's not programmable. So you need a symbiotic layer like Core where you can go realize these possibilities. And a lot of what we do is education. And I think what we've seen over the last little bit here is you're now seeing Bitcoin staking become a thing, and like people are now getting excited about that. I think we're a way off from institutions doing full Bitcoin DeFi. Like I think that's not a technical problem. I think that's a desire problem. But yeah, we're gonna keep fighting the good fight over there, and I think you'll expect big things from us.
So what would you say from for the other founders and kind of VCs watching the show? We have a lot of kind of sophisticated retail researchers, founders, dads, etc. What are some of the core capabilities, no pun intended, that a founder like yourself or a project like Core embody to appeal to institutions? Like what do they want to see to make a high speculative investment, like any kind of like non-top 3 token, investable for them? Like what makes them, like what makes a project institutionally investable?
So I love the way that you asked that question, because that mindset is actually effectively the worst way to go about it. And I don't mean that pejoratively. So what happens when most folks try to approach institutions is their pitch is, come buy my token. And that's essentially the worst way that you can get into these kind of relationships or engagements, because what you need to do is convince that there's value there. So one of the things that we did, really intelligently, in my opinion, was we attach ourselves to Bitcoin, not because we're, trying to do it for a narrative, but because I've been in Bitcoin since 2013, and it's my life's mission to get Bitcoin in the hands of billions of people around the world, and I won't stop until we do. But how we lead is we try to give more than we take. So what I mean by that is we approach all these people that now understand Bitcoin, at least for the most part, and there's a huge gap in between Bitcoin and Ethereum on like a lot of these TradFi players. And how we say is, okay, you've got Bitcoin, where if your Bitcoin is yield bearing? And then you go through all these different cases of like, what's the risk? What's the yield? Like, you go through all these different pieces. But the idea there is there's no, hey, come buy my token at the end. That's not the goal. And a lot of it's trust building. And I think in the Bitcoin space in particular, what people have really misjudged is they've tried to get people who are square pegging a round hole. So it's like, okay, if you're now, holding ETFs for the first time, trying to say, hey, come go use like 5x leverage in Bitcoin DeFi, that is a terrible sales pitch. Like that is just the total wrong audience. So what we have created is a list of products from Bitcoin staking, dual staking, the full EVM ecosystem to go meet people where they're at today and to not rush them. Because the quickest way to burn all the trust is to try to race people from 0 to 100. And we realize these are 14 touch point conversions. These are multi-year relationships. And like for good examples, some of the Bitcoin miners and the mining pools that are on Core, those took 2 years of BD. Like there's a lot of work there to go build that trust. You break bread, you figure out how to make it work. And that's how you really start to approach these folks. But it's really an institutional sales process.
If you haven't started, those who have started already are well ahead, because these things take a long time to kind of build.
That's totally true. I mean, look at all the work that Solana's been doing for the last couple of years to go get an ETF, and like that's going to pay dividends. And I think that's really smart. And I think you're going to see more and more people trying to do it. But there's a point of maturity, I think, with which you can do this, where you need to have probably some sort of trading track record. You probably need to have some amount of credibility, some other groups that can vouch for you, some key material partners, important introductions. And I think that's also another piece is like, yes, you should start yesterday, but you need to make sure you're ready to have those conversations, because you only get to make one first impression. And like, I sold call center software a long time ago, whatever, and you move your way up through different deal sizes, everything else. And a lot of these are relationships, take time. And like people don't necessarily convert on that first touch point. People might come back when they're ready for a renewal or ready for a new use case. They've got new innovation budget, wherever that is. And that's exactly when you need to be there.
Yeah, I mean, I feel that if there's going to be a dispersion in this return to fundamental kind of idea, which I've been pushing pretty hard on Twitter, I think we want to see that. I think we had the seesaw of high FTD, low float coins kind of come, and then we had the meme coins hit it, and that kind of shifted, and now we're kind of somewhere back in the middle. I think we have crowd sale platforms for new token launches. Memes aren't as fair as we thought, somewhere in the middle. But I think if there's one thing that's going to lead to more dispersion in flows and performance of crypto assets this year, it will be who gets the institutions on board. And so the clear example of this is Bitcoin. Bitcoin's hanging out right now around like 95K. We don't need to get too deep into speculative kind of price action talk, but it's very clear that the rest of the market has kind of been washed, for better or for worse, while Bitcoin's kind of steady and consolidating. So do you think the institutional capital has changed the 4-year cycle for Bitcoin, or where do we go from here for Bitcoin in terms of the institutional adoption going forward?
So I think you have structurally different demand curve, right? And like the ETFs really kick that off. Now you have potential, national Bitcoin reserves in different countries. Like that's just a very different kind of category than any other crypto asset. And I think it has changed the 4-year cycle because you don't get that waterfall, right? Like I don't think all the Bitcoin wealth then kind of comes back and flows back into alts. I think you saw memes extract a tremendous amount of speculative capital, both of which have really altered kind of what that cycle looks like. And I think now, like, do we have 4-year cycles anymore? It's really hard to judge. I think we're in some sort of like kind of trough of disillusionment after we got too far above our skis, probably on the Trump election and everything else. And now we're in a little bit of a lull, but I do expect both 2025 and 2026 to be good years, primarily driven by product market fit and real adoption. And I think institutions are one key piece of that. And it's also just, are you building products that people want on your other side, which is usually a consumer side? And if you have kind of a marketplace where both of these people can get real value, I think that's how you get these increasing returns to scale. But it's really hard if there's no one using your product to actually go out there and have a successful crypto coin this year.
So is there a limit that we should want institutions to be buying Bitcoin? Or better asked, does Michael Saylor own too much Bitcoin already?
I don't think so. I mean, like, you get a lot of these, like, are they co-opting like crypto itself, right? Like, and that kind of comes up fairly often. Like, there's that whole BlackRock like fork FUD where it was like they're gonna fork Bitcoin. I just like kind of laughed at it. Yeah, exactly. Well, it's also just like it's a risk disclosure, right? Like you're just misinterpreting like kind of how this works. But I think what I want to avoid on that side is not necessarily the ownership of Bitcoin, but potentially like the Wall Streetification of like Bitcoin mining and decentralization. So we have this security budget problem in Bitcoin that I've been harping about for like the last several years. And I think the Bitcoin mempool right now is empty. There is virtually no transaction revenue that's coming there. And we have to go solve that. And like one answer, maybe some L2s will start to generate more fees. Core has an exogenous block reward for Bitcoin miners. We're all trying to find ways to keep Bitcoin decentralized. Because what I'm nervous about is we could get to a spot where you wind up with like essentially altruistic mining or mining that is subsidized by centralized products. And you get to a spot where maybe Bitcoin miners actually can't produce profitably on their own. So you wind up with the ETFs actually being the large capital pools or MicroStrategy that actually wind up subsidizing because it's net more accretive for their business, or if they get other fees that can kind of allow that to run at a loss. And I think that's actually how like Bitcoin gets captured, right? Like, and that's what I would be more nervous about, because if you get rid of the decentralization of Bitcoin, I think a lot of that value prop goes away. And I think that would be, very net negative for crypto as well.
Yeah. So the core issue here is that we need to effectively keep Bitcoin on a steady logarithmic rise to adhere to the cost of electricity rising, but really it's about the halvings, meaning that the amount of Bitcoin generated every 40 years gets cut into half amount. So 6.25, I think Bitcoin every block right now.
We went down one. It's like 3, I believe.
Okay, 3.25 or 3.125 of Bitcoin per block. Yeah, and so there was a hat and it wasn't there. And so you mentioned L2s kind of bring some transactions potentially by settling all their transactions into a single transaction on the L1. That could grow, but we kind of saw that trend kind of come and go in a way. And what happened? Because we did that Bitcoin Beyond content series. We were very specific with who we brought on. I think all those teams are still kicking.
That's impressive picking.
And still doing well. But there was a lot of them that had like sketchy Chinese whales and incomplete technical designs.
Yes.
What maybe speed on us on like what's the state of the Bitcoin L2 space now, and like what happened over the last 9 months since it was kind of like all the hype last summer?
So I think if we go back to early 2023, we had ordinals, we had BRC20s, we had like Bitcoin got exciting again. And like we had launched in early 2023, been working on it for years prior. So we were actually not expecting that sort of like hype cycle to really happen until about now. Mm-hmm. So like it front run a bunch of those expectations, which is amazing for us and that sort of thing. But I think a lot of people realized they were behind. So what people decided to do was, okay, let me try to get something out there and let me look at ETH L2s, like kind of look at other things that were very sexy at the time. And people kind of pattern matching, like, okay, does this make sense? Does it not make sense? And I think a lot of the technology was just very much not there at the time. I think at the end of 2023, we had the first version of BitVM, which was pretty impractical at that period of time, but was again an amazing achievement by Robin and crew. And what people did is they kind of took this, okay, ETH L2 type thing with maybe some BitVM pieces and said, okay, let's go kind of tell everybody that's here now. And what wound up happening is a lot of people really overpromised on what was live or possible today, and they front ran like an entire cycle. And we saw that like, early January through like April, May last year, there's about 200 Bitcoin L2s or something at that period. I think now we're about down to about 27. So like you've already had like a 90% reduction. And I think that's because most people were just trying to play the narrative hype game. They weren't really trying to bring sustainable economic value, whether it's incomplete designs, more nefarious things. Like there was all sorts of stuff that kind of quickly kind of came in there. And I think since a lot of the Bitcoin aspect has kind of cooled because we've now come right past the realistic expectations and you have kind of a general negative market sentiment that's probably exacerbated that. But I think that's actually now why it's so interesting to get involved in the Bitcoin space again, because we all know this is $2 trillion today. Bitcoin DeFi is going to be hundreds of billions in the next couple of years, easy, and maybe trillions in the next like 10 years. And that's just such an amazing mark. People understand it. And I think you've now seen a flight to quality even of the project founders, where so many of the project founders now are really, really impressive. And I think you get people doing groundbreaking research that are trying to earnestly do their best, but it's still a lot left to be figured out. And Core's approach has always been different, which is we've been more product focused versus research focused. So what we've been trying to do is not wait for new opcodes or not wait for BitVM. We've been trying to say, how do we deliver value today? And then as that stuff becomes available, how do we incorporate it into our design? And it's a lot more like kind of practical, if you will, but that's been super helpful in us actually achieving product market fit and continuing to scale. But we have a lot of this research from other people to thank for some of the work that we've done.
Yeah, and there's more coming. I mean, there are a ton of teams that we can name, but so I think one thing that we talk about on the show a lot is, well, two things. One being purpose-built. So I think Bitcoin is very purpose-built as an L1, as a base layer. It's very much just, it was originally for peer-to-peer cash, right, in the original vision, but I think it's now more of like this extremely immutable and trust minimized base layer. It's effectively a store is made for now storing value and still good for peer-to-peer payments, but not as good as some of these other networks that are faster and cheaper. But that's okay. It's just, in my view, it's very purpose-built now for being the centerpiece of storing the global value. That's its purpose. That's why it's there. It doesn't have much. It has basically very little execution. Doesn't really do much on the DA side. And it's very minimal in a way, kind of like Celestia. It is very focused on its thing, and then it's able to then kind of scale in this horizontal way. And so I think that's a big thing that I am seeing with what you're saying here is we had 200 L2s, now we have 27. The vision hasn't changed. Bitcoin still needs to kind of go into this horizontally scalable direction, this modular kind of scaling path with L2 sidechains, but it also has a chance to what people call leapfrog a lot of the developments in Ethereum. So maybe you could explain why this horizontal scaling is crucial for Bitcoin in general in blockchain design, why this is basically the only way or the preferred way, and why there's a potential for Bitcoin to quote unquote leapfrog some of the developments from Ethereum, Solana, and others.
So if I was to like just kind of summarize, to a degree, like this whole kind of Bitcoin scaling wave is separating Bitcoin the asset from Bitcoin the rail, right? Like Bitcoin is slow, expensive, not programmable, and that is a feature, not a bug. And it's just appreciating that's what that is. And I think like that's why I'm very bearish on like native Bitcoin DeFi on Bitcoin, because it's not meant for that. It's too expensive. It's too hard to do. Maybe with new opcodes in the future, you get closer or whatever, but at least as of now, I think it's totally not there. And I think what that means is if you want to go put Bitcoin into morally highly utility-based environments, you need to do it on a scaling solution like a core, right? You need to be fast, cheap, fully programmable. You need to be able to realize all these different DeFi activities and kind of net new use cases that we haven't even seen yet. But it just by definition cannot exist on the Bitcoin L1. And I think we'll continue to see is more and more push for performance, more and more push for new use cases, because Bitcoin has no execution layer, right? It's very different than the Ethereum kind of L2 world, where you're actually competing with Ethereum. And I think forever it was like, is it parasitic or not? I think it's now pretty understood once Vitalik says, yes, it's parasitic, that it is a problem. And for Bitcoin, it is actually symbiotic, because you cannot do these things with native Bitcoin. And I think that's a very powerful potential. And I think then you get into, okay, who can do it faster, better, cheaper? Who can have the better use cases, the better environment? And that will hopefully get to a more competitive ecosystem and continue to push more and more Bitcoin use cases forward. And that's what we're super excited about. And I think if I go to Bitcoin's purpose-built nature, I think it actually changed. So originally we wanted it to be money. I bought a lot of really expensive coffees. That was a mistake. It's not a money, it's a collateral asset. And I think that's actually how we get to the original Bitcoin vision of be your own bank, be an alternative traditional financial system. It won't happen on Bitcoin itself. It's going to happen on scaling solutions like Core, you'll have like Bitcoin neobanks, other things where you have a little bit of Bitcoin, you can borrow against it, use stable coins, and now your TAM is like 3 billion people. And I think that's actually how we get rid of the middlemen, how we actually kind of go back to that original vision. And that's what we're trying to push forward. And for some people, that's not like the sexiest new meme use case, whatever, and that's okay. For us, we're trying to deliver real value to real people. And that's a law of large numbers game, right? Like that's where you can actually not only have like change and usefulness for a large amount of people, but you can actually like push the space forward. And we're super excited about that because I firmly believe Bitcoin should be in the hands of everyone. And you just can't do that on Bitcoin. Well, one, not just for the technical pieces, but it's just too expensive.
Yep. There's learnings that we can have from Ethereum. And I think that while Ethereum maybe views some of these high TPS chains as more of a competition, I think, and this is the question for you, do you think that Bitcoin L2s are more of a threat to Ethereum L2s than anything else in terms of if we can have highly scalable networks on Bitcoin, then why do we need highly scalable networks on Ethereum? Right? There's less security there by means of market cap and centralization risks.
Redstone is DeFi's modular oracle, supporting over 100 clients on over 50 chains and offering 1,000 assets. Redstone is the leader for Bitcoin staking and yield-bearing assets. They offer the most robust, customizable price feeds available in any model. Join the Redstone exhibition today.
I think security is one aspect of it. And I know the Ethereum people love to always harp on the Bitcoin security budget. And like Justin Drake will talk about like shorting it and like all that sort of stuff. I think that is a factor. I think my bullishness on like Bitcoin DeFi is I think it will strictly dominate Ethereum DeFi because it's a better base layer asset. And I think Ethereum is
because it's deeper liquidity.
Part of it's deeper liquidity, but it's also a collateral asset that now nation states are willing to hold. And you don't see strategic Ethereum reserves anywhere. And I don't think that's going to change. I think Bitcoin has this very special place, and I don't see why at scale it wouldn't actually beat it if it is a substitute that is competitive. And I think that's a lot of the question right now is like, can you beat Ethereum DeFi? And potentially, could you do it with full Bitcoin security? And I don't think that's fully possible yet, but I think that's what we're kind of all striving towards in the space. But I do think at scale, you'll see an Ethereum ecosystem that will exist at size. I think you'll see a Solana ecosystem at size that maybe is dominated by memes or whatever else. And then you'll see a Bitcoin ecosystem. And I think that's kind of the vision of the world that we see. And I think these things can exist in a non-zero sum way where there's just different use cases that are available potentially in different ecosystems. And I think that's a totally fine end state.
Yeah, we don't need to get into the technicals. We've done it a couple of times, but we can talk about how there's trade-offs around bridges in Bitcoin still yet to be kind of figured out. Also the data availability and kind of data posting problem or situation. Ethereum has kind of gone ahead and figured some of these things out, but also ran into now a ton of other challenges. And so there's going to be more and more kind of competitors, if you will, come out. But we believe that there's going to be thousands of chains and they will exist in parallel for niche use cases, for different target markets, and for different purposes effectively. However, some of the early Bitcoin people, and still to this day, are very much against this idea of assets outside of crypto. How do you explain this phenomenon to institutions or to other investors, friends who want to invest outside the space? Are you of the mind that Bitcoin is investable as a sole asset in crypto, or are you of the mind that there's other investable assets and that there's other quality out there?
I mean, I'm obviously biased, but in general, like it's all about like, it's less, does this product actually like have value to you? And it's similar to does this stock appeal to your interest, or like, do you have some sort of bias around it? And I think one of the things in crypto that like we continue to do is like try to distance ourselves from other things that we understand. So like, I think what memes have shown us is we're actually a lot more like the stock market than you'd think. Why? These are effectively pink sheets. Right, that's effectively what that is, right? And then you've got your smaller indexes, your like micro caps, and you continue to kind of work your way up. And we're just becoming more and more like traditional financial system. Like as much as we want to disagree with it, we're looking more and more like that. And it's important that you have to do your own research. You have to figure out what makes sense to you, what makes value, what you're long on, what you're short, whatever. That's totally fine. But like when we lump these things all together, is like it is good or it is bad. I just don't think that's the financial decisions that people make. And I think we just need to realize that there's going to be crazy amount of dispersion. That doesn't mean that all these things will accrue value. And I think forever there was kind of this idea: you'd raise a VC round, there'd be some demand for whatever you did, regardless if it had value or not. Yeah. And that's not true.
That's like pre-pump that fund,
Correct.
That was when there was a higher barrier to launch a token.
Totally.
And a chain, basically.
Totally.
That the commoditization of the launching of new assets and chains changed the game completely.
Totally. And I think that has now changed this demand curve forever. And I don't think there's any putting that genie back in the bottle.
No.
And I think that, is bad in a lot of ways, that like these things are, fairly extractive. But I think it also now puts like spotlights on things that can actually deliver value.
Yeah, it's a filtration mechanism. There's a bifurcation happening here in the next couple of years, which we'll see. One interesting thing about blockchain though is that like things like Litecoin and some of these coins have been around so long, they're persistent perpetual machines.
Yeah.
As long as there's miners or stakers in proof of stake networks. So you have these coins that stick around forever, that are traded, that have earned the Lindy effect of being on exchanges and things. But that's kind of like, there's going to be that group. There's also going to be coins that never made and teams that never made it onto exchanges because there's just so many. Those will probably struggle a lot harder, and those will probably like actually go kind of away forever. And then there's going to be the ones that like there's going to be the staying power. And I think that we kind of agreed that's going to be institutional driven and value driven. So I'm curious succinctly, what value does core bring to the world, to the institutions, to the average mom and pop, to the Bitcoin ecosystem?
So simply put, core adds utility to Bitcoin. And for different people, that means different things. For a lot of folks, that's just adding staking yield and making Bitcoin a productive asset. For other folks, that's full Bitcoin DeFi and using Bitcoin as a collateral asset and all these other amazing things that you can go do. But it's symbiotic with Bitcoin by being like a proof of stake layer on top of Bitcoin is kind of the easiest way to think about it. And that has value to kind of the smallest retail user out there all the way to the large institutions of the world.
Easy. Rich, any key takeaways from Hong Kong?
Any key takeaways?
For those who couldn't make it, what's the alpha? Do you have any alpha for us for core? Any upcoming interesting ideas, or have you heard anything in the Bitcoin space? Are you privy to any ideas or thoughts or info or conversations that can be shared that would help our audience make better choices or just be more in the know?
So a little bit of core alpha first. So we announced lstBTC. This is Core's liquid staking Bitcoin token. It's a partnership between Maple, BitGo, Copper, Hex Trust. And we're super excited about it. The idea is there's so many wrapped Bitcoins out there. These custodians are much more happy to partner with people that can help with distribution. They can get it out there and also have attractive yield while retaining custody of those assets. And of course, we want to get to trust minimized or trustless solutions over time, but see that's not possible. Institutional custody is a great option, particularly for institutions. The market for decentralized Bitcoin right now is a lot smaller than people think. And we think this will be a great new entrant to the ecosystem. We'll be able to bring it not just to DeFi on Core, but to several other ecosystems. We're super, super excited about that. We're also really excited about CoreFi. CoreFi is a micro strategy for Core. It's going to be launching up in Canada, and we're super fired up about that. No one's really tried kind of a micro strategy approach for an asset of the Core size, so that should be a very interesting one. We hope to have that launched by the end of the quarter. In terms of Hong Kong generally, I think what we've seen is points are now officially dead. And like I think for several times we've been like, okay, points meta's over. Like there's the whole kind of Eigen layer thing that kind of unwound or whatever. But I think with some of the recent launches of some new chains, some of those original promises were really not met. And I think what we've, for some of these liquid funds, from some of these whales, like people just don't trust points anymore. And I think for a new project launch and that sort of thing, that makes it that much harder. Like that barrier entry keeps getting sharper and sharper or higher and higher. And now you have to be able to deliver real yield. And I think that's an important one where it's like, can you get to an ecosystem that can generate real yield for your users? If you can, the amount of staying power you can have is that much greater. But there's just so much more scrutiny. And the final piece from Hong Kong is I'd say people are overly bearish, which is usually a good time to be counter. And I think people are pretty bearish in the Bitcoin space because of what happened last year. And for folks like us, Stacks, etc., this is when we get way more aggressive. Because when people are just kind of the tourists that are just kind of playing narrative games, whatever, they switch to AI, they do whatever, we go let them do that because we understand the potential of this market.
Okay, yeah, that's the Bitcoin way. You just let them try to, they always come back.
You always come back to Bitcoin. Like
no matter what.
It's just a boomerang. It's just a boomerang. So yeah, it's been
For me, man. Like,
we've all been there.
I don't mean to interrupt you making a lot of good points. I this does so much in Ethereum and so much in this modular space the last couple of years, and now I'm just coming back full circle to like, man, I need to have way more Bitcoin. Like, it's just what have I been doing for the last I have property in Florida. I run a property thinking about getting others. I'm just kind of thinking to myself like, there's so many headaches associated with other assets. There's so much less upside with other assets, and you can just throw your Bitcoin in the ledger. But this is kind of the same issue as what my mindset is: throw it in the ledger, bury it in my safe somewhere, and never touch it. But you're trying to unlock that value, right?
Correct.
But when I think of Bitcoin, I don't want to, I don't want to stake it, man. I just want to hold it and have zero risk, zero smart contract risk, zero yield. I just want to have safety. But the idea of borrowing against it to never have to pay tax on the sale is extremely appealing to me, because that means I can fund my lifestyle. Bitcoin goes up over time as long as I manage my ratios well and don't spend out of my pockets and just live a humble life. I can effectively live through the appreciation, theoretically, of Bitcoin while borrowing against it tax-free.
So one, totally agree with you on the borrowing use case. Shout out to Matt from Mezzo. They're doing this whole like buy now, pay never, and I think that's it. And I think it's a great slogan, and I've adopted it as my own. In terms of the staking thing, whatever, I think that's like a big education problem right now. At least in Core's case, there is no principal risk. So you can just do it totally passively and earn yield in your Bitcoin. I think that's been a big selling point for these different folks that have gotten involved so far. And I think if you combine that, now that's paying off some of that loan, that gets really interesting, right? Because it becomes even cheaper to kind of play that game. And I think that's smart because people want upside exposure to Bitcoin. They want leverage in dollars. That's the killer use case of Bitcoin.
But I don't mean to be dismissive, but there's always risk. Like there's some way that the system could not go well.
Not in our case. So you only have to trust Bitcoin.
Okay.
So you do a Bitcoin native time lock, and that Bitcoin native time lock means that
a smart contract on Bitcoin, or not smart contract. It's a mechanism that you can do with Bitcoin.
It's a relay over. So you're never minting a token anything else. It gets factored into our consensus mechanism. The worst thing that can happen in that case is you don't get your core rewards. But critically, your Bitcoin is never vulnerable.
So if core of the network had some sort of consensus issues, had rewards or something,
it would not impact your Bitcoin at all. Correct.
So this is education that these institutions would, because like even understanding what a relay is into a reorg, into a consensus failure, into not impacting your Bitcoin, that must take weeks.
So that like realization loop that you just went through is effectively the conversation I have like 20 times a week. Because what most people start off that conversation with is, I'm never sending you my Bitcoin. Because they assume there's a multi-sig, or they assume there. No, totally. You're like 2 steps ahead of that, right? And you got to go through this like objection handling, really. But the idea is to get people comfortable. And notice that I'm not saying go do it today. I'm saying go do homework, go do research, like
try it out.
Totally. And that's like the best I can do here. And like, hey, we've known each other for 2 years. Whatever, just keep talking. Who's maybe eventually you'll do it. But I need to move at your pace, right? And that's where so much is, and that's the key to the institutional sales process in my mind. Is like, it's just so many questions, and you might answer the same question 50 times, and it might be kind of annoying to you, but it's important to do that education. And I refer to myself as the chief education officer for Core. And that's all I do, is just try to have conversation, educate people. And like, you're one of the most crypto native people like I've probably ever met, right? And like, we still have to have this conversation.
So, and I'm struggling to think about a more risk-adjusted financial strategy for those who are not stuck in 5-figure hell, if you will, or unfortunately, there's a lot of financial situations across the world when we get into like the depth of it. But if you have a significant capital allocation, or you're working a normal job, you have disposable income, investing into Bitcoin and then being able to borrow against it, especially if Bitcoin's earning some sort of yield, like you get the treasury rate or something like that, less or more. You get the upside of Bitcoin, also the downside. You get the tax-free ability to use that capital if you need it, emergencies, or you just want to spend it, or you lever up and go buy more other assets. Not financial advice.
Yeah, I was gonna say not financial advice.
and you know that like for me, Bitcoin's not like risky enough in a way, but that's why I'm full boomeranging, because it's like, okay, we've done quite well the last couple of years. Our venture stuff is going well. Business is working. Now I'm less so in like 10x, 100x mode. I'm more like, okay, if Bitcoin give me a couple X's over the next 20 years, like in 10 years, I'm a happy camper. That preservation is more important for me, I think, now than ever. I think that's why I'm boomeranging.
You can never have enough Bitcoin. And I think that's never been more true today, as like the macro environment becomes a total mess and you have like global instability, so many different ways. Like you just never have enough Bitcoin. It's exactly the pitch that you made, right? Like there's tax advantages, there's, kind of a hedge on all sorts of, various collapses. Like I just don't really think you can go wrong. And I think that use case is also like a very clear cut use case that applies to everyone on earth, which is very rare because in most like crypto stuff, it's like, okay, you're on the tip of the DeFi spear or something else. But stablecoins are an example. It's amazing for maybe like less developed economic systems or people that cannot have access to US dollars or whatever else. And it's not as much of a fit for the first world. In the first world, it's cheaper and better or whatever, but a lot of these things don't have quite as much staying power. Well, for the whole world, that same use case actually makes a lot of sense. And I think that is why it's such a critical piece and why that Bitcoin message goes through to everyone. It doesn't matter who you are. You want Bitcoin exposure and you want leverage in dollars. And that's it. And that's just such a powerful message. And I think that will be one of the reasons that Bitcoin continues to lead this trend, forever.
Rich, thank you so much for coming on. It's been a pleasure. Great conversation as always.
Thanks for having me.